continue our chapter number 17. Okay. And before I proceed and before I discuss further in the chapter number 17, any doubts till now on any of the part that we have discussed? Good evening, sir. My question is it necessary to read in that all standards on internal audit? No. The standards on internal audit which are covered in the session are only required to be read, okay, to that particular extent, nothing else. So yes, if there is an annexure given in your study material, you need to go through the names plus the standards which are discussed in your study material. To that extent they are discussed, you are required to read that only. But if you want to understand something further, if you want to learn something further, nothing is stopping you. You can go ahead and read. Okay, but from the perspective of like your exam, whatever is there in the study material is final, that you need to cover. Any other doubts? Any doubts? Okay, if no doubts, can we do a quick recap? Can we do a quick recap on whatever we have discussed in the chapter number 17 till now? Okay. Okay. So let's start with a quick recap. First thing that I want you guys to answer with respect to due diligence is that when is a due diligence carried on? Simple. When do you carry on a due diligence? Anyone? When do you carry on a due diligence? Very good, Manish. Yes, absolutely correct. When there is a deal transaction going on or about to happen, at that point in time, you carry out due diligence. Okay, lending or financing or deal transaction, basically. Now, second question, is there a requirement? Is there any mandatory requirement to conduct a due diligence the way we have in the audit? Is there any mandatory requirement in the due diligence, okay, to conduct the due diligence the way we have for the audit? Is there any mandatory requirement? Is there any mandatory requirement under the law to conduct the due diligence the way we have for the audit? Simple, straightforward question. Anyone? Yes, no. Do we have any such requirement under the law to carry out the due diligence the way we have to carry out the audit? No, it's not. Okay, we don't have any requirement. Under law, there is no requirement to carry out the due diligence the way we carry out the audit on an annual basis, on a periodic basis. There is no statutory requirement. Okay, so there is no legal requirement to carry out the due diligence. Now, when we talk about the due diligence from the financial statement perspective, or let's say, for example, the review of the financial statements, when you have to carry out the review of the financial statement, basically the balance sheet under the due diligence, tell me two important areas that you look for. Tell me two important areas you look for. Very good, Manish. Yes, hidden liabilities and overvalued assets. Absolutely correct. And can you tell me 2 to 3 examples of the hidden liabilities that can be present in your balance sheet or in your books of accounts? 2 to 3 examples of the hidden liabilities that are present in your balance sheet or books of accounts. Lease liabilities. Okay, good. Basically, future lease liabilities. Yes. What else? 2 to 3 examples. Warranty and tax liabilities, contingent liabilities. Yes, absolutely correct. Very good, Ravindra. So warranties, contingent liabilities, tax liabilities. Yes, very good, Ravinder. Very good, Manish. So these are certain examples of the hidden liabilities. Okay. And we understood in the due diligence that how the due diligence is carried out. We also went through and discussed some of the portion of the uh, you know due diligence report, that how in detail due diligence report is drafted. Okay, which are the things that are required to be enumerated in the due diligence report at minimum, because there is no standard structure for a due diligence report. At a minimum, we have to involve something, basic minimum criteria for the due diligence. Now we were discussing, after the due diligence we started discussing on the investigation, where we understood the difference between investigation and audit. Okay, now we will come to a very important part of the investigation. Very important. The part is that how basically the investigation is carried out. Okay, so we will talk about the process of the investigation. Now, why it is important? Reason, because see, when I talk about investigation and when we discuss investigations, investigation can be of two types: one statutory, one non-statutory. Do anyone know what is statutory investigation if you have read the study material? Anyone? Like, what is statutory investigation? Yes, no? Do you know what is statutory investigation? So a statutory investigation is the investigation which is done under the law. Non-statutory investigation is the investigation which is done by parties, which is not done under any law, but it is done by the parties. That means parties wish to carry out the investigation, and they appoint the inspector or investigator to investigate into the matters. Okay, so there are two types. And when I talk about statutory, there are multiple laws in picture which requires investigation, but as of now we will only cover the Companies Act. We will go and we will see the Companies Act from the perspective of statutory investigation. Now the question comes is, see, like there is a statutory, there is a non-statutory investigation, all these things are there. So there should be, when I talk about statutory investigation, that means law requires to conduct the investigation. Okay. Now the question comes is, if there is a requirement of the law, there should be an appropriate mechanism also to conduct the investigation. There should be appropriate mechanism to conduct the investigation. Tell me, how do you carry out the audit? What are general steps of the audit? What are the general steps of the audit? Straightforward. Like, we will understand that, okay, how from audit we have to go to the investigation, but let's understand the general steps of the audit. Understanding, planning, yes, planning, then understanding. Then what is the next step in the audit? Risk evaluation. What else? Substantive, then response to risk, reporting. Yes, these are absolutely correct. These are absolutely correct. Okay. Basically, when I talk about audit, these steps are appropriately correct. We are required to carry out the audit in this way. Now let's modify this with respect to the investigation. When I talk about planning, okay, when I talk about planning, see, planning, why we say planning and audit is because we know the scope. Scope is fixed. In audit, you have a scope, fixed audit, financial statements, okay, audit of financial statements, statutory audit, things are there. So you know the planning. You know what is the scope. But when I talk about the investigation, you don't have a scope. When I talk about audit, you know what is the objective. That is, we need to issue the opinion, true and fair. Okay, we know that we need to issue the opinion. We know that okay, this is the scope, this is the objective. Do you know the scope and objective in the investigation before starting it? Do you know the scope and objective of the investigation before starting the investigation? Or I'll reframe the question. Whether the scope and objective of each and every investigation is same. Whether the scope and the objective of each and every investigation out there that anyone will perform would be the same or it would be different. Obviously, yes, different. Very good, Ravinder Manish. Yes, Aliti. Very, very good. It would be different. Okay. Then, if it is different, that means one investigation will differ from another investigation. The objective of one will differ from objective of another. So before starting any investigation, you need to understand what is the scope and objective. Now, coming to the audit. When you start a statutory audit, or when anyone will start the statutory audit, whether the objective and scope is going to differ, whether the objective and the scope of the audit is going to differ. I'm talking about statutory audit, not internal, not GST, not tax audit, no, only statutory audit. So tell me, if I perform a statutory audit and you perform a statutory audit of XYZ company, I perform for ABC company, is my scope and your scope going to be same or different? There will not be any difference. Same. Yes, very good, Manish. Very good, Ravindra. It will not be different. It will be same, because at the end, we both have to issue the opinion, true and fair view. We have to look into the financial statements of the company. Okay. Now, when we talk about the investigation, that's where things starts, being different. That your investigation, my investigation is different. If your investigation and my investigation is different, then first and foremost, foremost step that should come into the picture is determination of the scope and objective. Before I do anything, I need to decide what is the scope and what is the objective of the investigation. Then only I will proceed ahead. Otherwise, I will not. Because I should be clear what I need to do. Okay. So for the investigation, and we are talking about steps. Okay. The first step would be determination of scope and objective. Okay. Now, when I say determination of the scope and the objective, okay, of investigation, what will you decide in this? What will you decide in this? You will say, sir, we will decide the scope and we will decide the objective. Yes, but what you will decide in the scope and what you will decide in the objective? Now, what will include in the scope and what will include in the objective? Let's say I'm giving an investigation. You will say, sir, first step, determination of scope and objective. What you will do then? Very good, Manish. Yes. The objective is basically nothing but what is the expected from this investigation. What is sought to be achieved? Okay. The basically what is the target of this investigation, if I talk about. So when I talk about objective, it is what is sought to be achieved by this investigation. So investigation will happen with a purpose only. Okay. It's not something like, okay, we are free, let's do some investigation. No. It is a purpose-driven exercise, a narrow fact-finding exercise, fact establishing and understanding exercise. So first of all, you need to understand what will be achieved by this investigation. Number two, scope. Correctly pointed out, Manish, the period, the things that will be covered, what I have to look for. You cannot just say me, okay, do investigation of the company. I cannot do investigate everything in the company. You have to be more specific as a client or as a person who is providing the assignment for the investigation. What we have to investigate what? So basically it will be what to investigate. And then you will say that, okay, if I do the investigation, what you want me to achieve by investigating this particular area? That's a scope and objective. Okay, now let's say I decided the scope and objective. Let's say scope is that there is some revenue transactions and there is a fraud in revenue recognition, and the scope of the investigation, recording the revenue or revenue recognition for a particular period of a particular company. Objective, to establish whether there is a fraud or not. Simple. Okay, now second step, what you will do. Once I decided in my example, let's say I decided the example, hypothetical example. Okay, for example, the scope is revenue recognition. Okay, for let's say FY 23 to 25, bigger period. Okay, and the objective is to establish malpractice in revenue recognition. Okay, that is something we want to achieve. Now what is second step? Program. Okay, anyone else? What is the second step? Collection of data. Okay, see, why I would not say collection of data is because you need to understand how to collect the data. It's an investigation, detailed fact finding exercise. That means you have to be precise what you are collecting, what you are not. You have to be precise with respect to the procedures. Now, sometimes these are carried out anonymously. That means, without anyone letting know in the company that the investigation is being happening. Investigation sometimes happens without anyone being known. Okay, there are people, they will never come to know that the investigation is going on. Clear? So if that is the case, if basically investigation is done in a way that very few people come to know about that investigation, now the question comes is, can I go and directly collect the data, or I have to do something before I do the collection of the data? Anyone? Can I go and directly collect the data, or I have to do something before I collect the data? Investigation is done, so no straightforward, yes, but I cannot go and directly collect the data. That is the problem in investigation. You have to be precise what you want to investigate and how you want to investigate. So simple, if I talk about, let's say I'm doing the investigation of the revenue recognition, fine, but I have to be precise that, okay, from here I need to collect the data. This is how much I need to collect the data. And let's say tomorrow, if you go for the collection of the data and people come to know that you are doing investigation, then, and you are supposed to keep anonymous, then how will you conduct? So in that particular scenario, you need to understand that your investigation, how it should be carried out, so that you should not either reveal the things, or you should not either basically do the things which you are not required to do. And that's where the second steps of the investigation comes into the picture. Okay, and that's where the second step of the investigation comes into the picture. That is the formulation of program. So I need to formulate the program. Now, what I will do in the program, basically, when I talk about formulation of the program, I will understand the business, who is where, who is doing what, okay, and whose responsibility it is there in the revenue area, what is the structure, how many manager, how many people are there, okay, what work is done by which person. First, I'll take that understanding. Then only I will come to know, okay, I need to reach out to this person. I need to reach out to this person for this data. I need to reach out to this person for this data. Okay. I need to develop a particular program understanding all these things, the nature, the structure, the person, the scope and depth. Okay. Let's say, for example, I say there is a fraud in revenue recognition. Which type of revenue? Are you getting the point? Which type of revenue? So when I talk about this program has to be in detail. It should provide me, okay, detail scope, like area by area. Number two, it should help me to understand the structure, people, organization, okay, all these things. It helps me to understand all these things so that I can take a decision and I can, decide where to go, for which data. Tomorrow, let's say what I do is I need a revenue recognition data, and the person who is doing the malpractice, I say, okay, I'm doing an investigation. I think there is something wrong in this area. Can you give me the data? Do you really think he will give you the correct data? No. Or either he will rectify before giving you the data. So it should not be a case that you are going to a thief and asking that, was there anything stolen? So that should not be the case. Investigation, basically, we have to be very much considered that what activities are being carried out and with whom. Okay, which areas are being covered? Are we required to cover those areas? And there are ways and mechanisms to carry out the investigation. Okay, there are ways and mechanisms to carry out the investigation. I'll come on that. Okay, I'll come on that, but I'll just tell you, right, few things, that investigation is very different than audit. At times it is very discreet also, okay, uh, because of the nature of the investigation. Okay, then once I do that, once I formulate the program, then what I'm required to do? Once I formulate the program, then what I'm required to do? Anyone? Evidence, yes. Very good. Very good, Manish. Regarding investigation, okay. Anyone else? Execution of plan, I think. Evidence, yes. Okay. So when I talk about basically the investigation, the next step is nothing but you collect the evidence. Okay, you collect the evidence. Now, when I say you collect the evidence, that means over here, your role will be, based on the plan, execute the plan. Nothing but. I'm saying that whatever plan you have decided, execute it. Execute the plan and collect the evidence. That is your step. Clear? Any doubt till now? Any doubt? Okay. Now, once I basically collect the evidence, once I, go and collect the evidence, then pretty much straightforward then what do you think will be the next step? What do you think will be the next step then? Anyone? Evaluation, evaluation of the evidence. Yes, very good. Evaluation of the evidence. Okay. Evaluation of the evidence. Now, basically, when I talk about evaluation of the evidence, here the things start a bit different. Again, I'll just give you a brief example. Okay. Now, when I talk about the next step, evaluation, see, this is very critical phase, because, as I said, what is the type of exercise is the investigation? Fact finding. Okay. It is nothing but fact finding. Now, when I talk about evaluation of the evidence, that means that when I evaluate the evidence, I need to make sure that I am appropriately evaluating the evidence. That the way I'm evaluating the evidence, for example, there is a malpractice in the revenue recognition. Now, if there is a malpractice, I have to be precise with that. I have to be, appropriate with that. Like, okay, what was the malpractice? How much was supposed to be recorded? How much has not been recorded? What is the problem? What issues they did? Okay. And accordingly, basically, all the things, I need to evaluate the evidence from all the perspective. I need to evaluate the evidence from all the perspective. So that I can basically now decide whether the evidence that I've collected, it should not be a prima facie evidence. That means, okay, I have a evidence which says reasonably that there is a malpractice. No, you have to be absolute. There are multiple factors also involved that you need to consider, okay, while evaluating the evidence, or while performing the analysis and the interpretations of the finding. So again, as I said, like, there are things that you need to understand with respect to the evaluation. So conclusions, or what you think, professional judgment here, okay, is very less, rather than the fact. What you need to apply is a fact finding exercise. This is the fact finding exercise. So you have to be specific, rather than applying the professional judgment, extrapolation. All those things will not work over here. All those things will not work over here. Rather, here you have to be factually correct. The interpretations has to be clear. The interpretations has to be precise. Okay. When I talk about evaluation of the evidence, it has to be precise. It's conclusive. Yes, it has to be conclusive that, okay, there is something, or either there is nothing. I cannot say that, okay, there is a probable chance, or there is some reasonable chance. No. Probability or reasonability is not something that works in the investigation. Either yes, either no. Okay. So accordingly, I need to decide whether things are there in the investigation, in the evidence or not. It has to be conclusive. Okay. Free and clear. All these things should be there. Now comes the last part, very important, of each and every assignment, which is reporting. Okay, reporting. Now the question comes is, when you talk about a report in the audit report, there's a standard format. What about the report for the investigation, is there any standard format? There was a standard format for the purpose of audit. Is there any standard format for the purpose of basically investigation? Anyone? Is there any standard format for the investigation? Only consider relevant points regarding investigation. Okay. So basically, when I talk about the points with respect to the reporting part in the investigation, or when I talk about the investigation report, okay, there are a lot of things that you need to take care. It's not like an audit report. First of all, it's not something like an audit report. These investigation reports have to be detailed, and it has to consider, or it has to provide things which are relevant. If something is not relevant, it will not form part of the report. Number two, the report has to be clear, detailed. You cannot keep a vague report, basically. Okay. So you cannot keep a vague report open, like vague report, basically. Now, for example, let's say, if I talk about a report, let's say fraud examination report or fraud investigation report, I cannot keep, that, okay, somewhere I say that there was a fraud, but I don't know which are the parties. I cannot keep a report like, okay, this was a fraud. We know there is a fraud, but we are not able to justify how the fraud has been done. So in reporting of the investigation, things works like that. Whatever you have understood in the evidence, whatever you have known in the evidence, whatever analysis you have performed, whatever fact you have found, you should be able to demonstrate in your report. If you found that there is a fraud in revenue recognition, you should be able to write in your report in the same way in which you have understood. If you can do that, then your investigation is appropriate, your report is appropriate. If you cannot do that, that means your report and your investigation is not appropriate. Okay. Are you understanding the point? So basically, when I talk about investigation report, it has to be what you have done. Simple. What you have done till now, whatever you have performed, that should be there. Here, we are not more onto the opinion. No, we are not here for the opinion. Understand that. The purpose is not to provide the opinion, rather the purpose is to provide basically what has happened, what things have happened, and accordingly we need to provide the details that, okay, these are the things which have happened, these are the things which have not happened, and this is the final outcome, rather than giving an opinion. Rather than giving the opinion, these are the few things that has happened or not happened. What word used in the final report? Can you explain which word you are talking about? So when you say opinion in the report, opinion has to be like, what is the outcome of the exercise, whether you have achieved the objective. So the opinion here has to be linked with the objective. For example, if you say that basically this was the objective to establish the revenue recognition fraud. Is there a revenue recognition fraud? That is something you need to specify. Okay. Is there a revenue recognition fraud? If yes, then you need to write about that in your final paragraph. If not, then you are not required to write there was no fraud. So whatever you have identified, you need to specify that thing in your report. And that could be the final part or the opinion part of your report, basically. Clear? Any doubt? And when I talk about basically reports, in investigation reports, it has to be linked appropriately. If you are taking any assumptions, you have to specify that what is the nature of the assumptions. All these things are required to be given. So everyone, please come on the page number 17.21 of your study material. Some important points which are given with respect to your investigation report. Okay. Number one, we already discussed this, that it should not contain which is not relevant. If it is relevant, include. If it is not, remove. Number two, every expression or the word should have the same meaning. It should not arrive at the different meaning. For example, if I say, let's say for example, hypothetical example, you are using the word team. And in the starting paragraph, when you say team, it means revenue team or the team who is recording revenue. Then down somewhere, when you are using the team, you are using the team as an audit team or investigation team. No, that's in confusion. Once you decided the team word is to be used for the revenue team, then later on you cannot use that word team for the investigation team. Okay. So either investigation or revenue team, the word or the definitions that you are providing in your report has to be precise. Facts and conclusion, as I said, appropriately linked. You cannot keep everything open. Okay. Reasonableness should be there if you are using basis or assumptions. Then if there is any limitations, if you are not able to see anything or if you are not able to perform anything, provide that in the limitations. Okay. Give the details. As I said, whatever you have done, you need to provide that. Some may provide in the annexures, some may provide in the report, but usually if the data is big, if the data is detailed, provide that particular detailed figures and the data in the annexure. And then your final part, opinion. That is what has been done, what has been achieved or not from your report. Clear? Any doubt? Very important part. See, conducting investigation is one thing. Conducting investigation is one thing. Writing a report is another thing. Because report writing is also that much important as it's the investigation. Because if once you perform the investigation and if you were not able to provide the report, it would be a problem. So the fifth point in this is limitations. Let's say, for example, your role was to perform the revenue recognition, okay, investigation. Now that too anonymous. Plus, that means you cannot reach out to a person. You can only see the data. You can do the analysis of the data. Now you obtain the data, but certain things are not clear. Why this decision was taken? Why this particular, data was recorded in this way? A lot of things you cannot understand from the data, but your scope was doing background investigation, anonymous investigation, rather than going to the people and meeting the people. So there was a limitation. You need to specify that limitation. Yes, there was a limitation. We were not allowed to meet people. As a result, we cannot ascertain why this was done. But what was done, that is there. Then, with respect to point number 7, okay. When I talk about point number 7, it's an restriction that is placed by the client. First was the restriction which is in the nature of the assignment. As I said, anonymous. Now, point number 7 talks about restrictions or limitations imposed by the client. That means you were doing the investigation and client came to you, you do not do this. Although it was part of your plan, although part of the scope, but you were stopped from being doing that. That is the 7 number. Clear? I hope the 5 and 7 is clear. Manish, I'll come to your point in some time because those are very important that I need to cover. But apart from that, any doubt? Now, the downside, again, I cannot show you an investigation report because these reports are not publicly available. Okay, these are kind of reports which are not publicly available or are in public domain. As a result, very less examples, or rather I would say no examples are available of a real investigation report which is there in the public domain. You can get a different formats, but again, the investigation reports which are there are defined based on the type of investigation. So one report cannot be applied in the other scenario. Okay, so if you think like there is an investigation report can be shown, like, it is not possible because in public domain those are not available. Those are the confidential information. Any doubt till now? Any doubt about the investigation process and the report? Okay. Now, few specific areas about the investigation. Few specific areas about the investigation. See, when I talk about specific areas, these are the critical areas that you need to understand with respect to the investigation. But before that, we will take a particular question to discuss on the investigation reporting part. And then with that, we will take up a specific, point, basically like the specific areas and everything. Okay, just let me share the screen for the audit or for the question. Straightforward question. Whatever we have discussed right now, that is the part of the question only. Messrs Zenith Logistics Limited, a large-scale warehousing company, has experiencing a consistent decline in its net profit margin over the last 3 financial years, despite a 20% increase in the revenue. The board of directors suspects a systematic siphoning of the funds through inflated fuel bills and the ghost vehicle entries in the transport division. The board of directors have engaged you or your firm, Messrs Sharp and Company Chartered Accountants, to conduct a formal investigation to identify the existence and the extent of the fraud. During the preliminary meeting, the managing director asked you to explain the approach you will follow for this engagement, as they want the investigation to be legally tenable for the potential criminal proceedings. Okay, now elucidate the steps in the investigation you would follow to conduct this assignment effectively. And then we will come on to the few points. So number one, provide the steps that you will follow to conduct the investigation. Simple, whatever we have discussed till now. Same area. Quickly, give me the answer. Anyone? Very good. Yes, Manish. Yes, very good. Anyone else? Very good, Manish. Very good, Ravindra. So basically, what we are talking about over here, evaluation, collection, objective, program, all these things. Let me give you a quick way to remember. Quick way to remember this. OPEAR. OPEAR. That is OPEAR. Okay. Basically, you can say that in a way that it is dash PEAR. Now, what is this? What is OPEAR? OPEAR basically is nothing but the steps of your investigation, starting from your objectives. Okay. Then the second step basically is nothing but your program. Then the third step is nothing but your evaluation, collection of the evidence. Fourth analysis and interpretation. Fifth is the reporting. Okay, so this is nothing but the objective, program, evidence, analysis, and reporting. That is the shortest way to remember the steps of investigation. Clear? Any doubt? Next question. Explain the important issues to be kept in mind by the investigator while preparing his report. Give me 3 important issues. 3. That whatever we have discussed. 3 important issues. Quickly. Only relevant content? Yes. What else? What else? Okay, relevant content. Requirement of person who appointed. No. Okay. Limitations. Yes, very good. Anything and anyone else? So the important issues while preparing the report, assumption and conclusions is absolutely correct. So basically, when I talk about, wait a minute. When I talk about the important issues, they are report should not contain which is not relevant. Word or expressions should be same. They should, they should not arrive at a different meaning. Okay, they should have a similar meaning. Then relevant facts and conclusions should be properly linked with the evidence. Reasonableness in the basis or the assumptions that you are making. Okay, if there is a limitations, provide that. Data figures should be in the annexures. Okay, if there is a client imposed restrictions or limitations, state that, and then you give the opinion. So these are the few important things about the while preparing the investigation report. Clear? Any doubt? Okay, now second question. Basically, so this is the, you need to write any 3 options from this only. This is the answer only. So when you have to write the answer, you need to write, based on the marks. Let's say, for example, a question has only one this particular question. Okay, you need to write 4 to 6, 5 to 6 points from these points. If there are 2 to 3 questions, then you need to write, accordingly the marks which are given. Let's say if it is 2 questions given, the way it was there in our question. Okay, let's say for example, let me go back to the question. Yeah, let's say if there are 2 questions given, we will remove as of now this one just for your understanding. So what you will do is you will basically invest 2 to 3 points over here and 2 to 3 points over here. Okay, so when I say steps in the investigations, you will provide this investigation steps that will be done because that is specific. Then explain the important issues to be kept while preparing the report. You will provide 2 to 3 points, okay, of the reports. So that is how you basically will write the answer, and the language will be over there. Clear? Any doubt? No. Basically, that's where the question which is given, it is for the context. Okay. So the question here which is given is for the context. So your this particular case is just a context which is given for the questions which are being asked over here. You need to answer these questions. Even in the exam, whatever case is given, when the question is asked, you need to understand whether the question is relevant to the case or the case is in the context, just to explain the question. Clear? Any doubt? Because in exam what will happen is, let's say for example, there are questions which will let's say will ask about this reporting part. So there will be some background given in the question itself about about this kind of scenario, but in the end they will ask specific question for which the above case scenario is just a context. So in that particular area, you are not required to basically mention about that particular case. Rather, you need to specify about the question which is asked. Okay. Any doubt? No? Okay, fine, great. If no doubts, then let me proceed further. Now, basically, what we understood is some basic points of the investigations, and we understood basically how the investigation is carried out, the process. But there are some specific areas that we need to understand about the investigation. Number one, we understood about the scope. Now, the first question comes is, are we required to perform 100% testing of the scope? So let's go back to our question. Okay. Let's say this is the question. Okay. Now there was an issue with respect to some of the areas in this question. Now the area was, there was a systematic siphoning of funds through infiltrated fuel bills and ghost vehicle entries. Let's say when you are investigating this, when you are doing the evaluation of the evidence and collection of the evidence, the question may comes is that, are you required to test 100% of fuel bills and vehicle entries? This question can come. Are you required to test 100% of the fuel bills or vehicle entries? Yes, in this scenario, or no? Okay, now that depends upon the scope and the objective of the investigation. Okay, let's say, for example, here you need to ascertain where there is an existence and to what extent the fraud is. So what is the objective here is to identify the existence and extent of the fraud. Okay, existence and the extent. Now, when I talk about existence and the extent to which amount, you have to go for the 100%. So your objective will decide whether we need to go for 100% or whether you need to go for partial testing. Number two, when I'm doing the investigation, let's say the period, okay, for this particular scenario, the period was FY 23-24 and FY 24-25. Now the audit report of both of the period are available. Okay. Now the audit reports for both of the period are available. Now you tell me, will you rely upon the audit report? Will you rely upon the audit report or not? To some extent. Okay. Anyone else? Should I rely upon the audit report? Not fully. It has not fully, has it will be sample based. Okay. Now, answer to that question will come from what is the starting point. Okay. What is the starting point means? From where management identified. See, management basically saw declining in the net profit margin over last 3 financial years, despite increase in the revenue. Okay. Now, let's say the management raised the questions on the financials. If the management is raising a question on financials, in that case, you will not. Okay. So, for example, in this, you need to ask again one more question. Is there a question on reliability of financials statements? Like management has this particular financial statements, and they are in that financial statement, they are seeing this, that last 3 financial years, despite 20% increase in the revenue, there is a decline in the profit margins. And we as a management, let's say I'm the management, and I said, no, being a management, I see that there is an increase in revenue, but there is a decrease in the net profit margin. That means there is something wrong in these financial statement, in audited financial statement, and I do not agree with them. That's why I am hiring you, the investigator. You go and investigate. In that scenario, you will not. But if management says that the tripping point or the starting point or the trigger is not the financial statement, it's something else, or the assignment is based on something else, not based on the financial statement, over there, you should not raise the question on the financial statement, audited financial statement, unless and until there is something incorrect, or there is something in your hand which says that you should not place reliance. So there are two conditions. Should I place reliance on financial statement? So should I place reliance on financial statement? So you need to answer two questions. Number one, is there a doubt about reliability of FS? Okay. Now here it can be yes and it can be no. If yes, then do not rely. If say no, there is no doubt about the reliability of the FS. Okay. Then you need to see what was the point of initiation for this engagement. Point of, you can say, trigger, or what triggered this investigation. Okay. Now, if the answer to this is FS, like FS triggered this, then again in that scenario, do not rely. If I say no, it is not FS, something else. Okay. And second question that I will ask is, okay, is there any evidence pointing issues in FS? Now, if I have a evidence, okay, if I have a evidence that there is something, issue in the financial statement, in that case, I will not rely. Otherwise, you can rely on FS. Simple. You can rely on FS. Otherwise, you cannot rely on FS. So if there is something issue in the financial statement and you have the evidence, it will again points toward the reliability issue. And then if there's an issue in the reliability, then no. Otherwise, yes, I can rely on the financial statements. This is how basically you should decide. And let me write in a way that should be distinguishable. Yes, you can rely on audited FS. Audited financial statement. So we are talking about audited. Clear? So these are the few things that you need to understand. Is there a doubt on reliability? If there is is there any evidence pointing issues in FS? Yes, then there is a doubt on reliability. And yes, do not rely. Point of trigger, yes, FS of this entire investigation, do not rely. If there is something else, yes, you can rely on the audited financial statement. Clear? Any doubt with this? Any doubt? So when to rely on the financial statement and when not to rely on the financial statements? Now, second question, can investigator appoint an expert? Can investigator appoint an expert? An expert. Auditor can appoint an expert, and we have a standard on that. Which is that standard where auditor can appoint the expert? Ravindra, can you just specify where you are talking about, like professional judgment or skepticism? Okay, financial statements, professional judgment or skepticism? No, I will not say professional judgment or skepticism. Rather, I would say facts. See, again, judgment and skepticism, basically, you have to be, driven by facts in the investigation. Now, when I say driven by the facts, you need to understand what facts say, whether the facts that you have, with respect to the scope or with respect to the issues, there are any known facts. If yes, then you should not rely on the FS. I'm not saying there is a professional judgment, hence I'm not relying. No, there should be facts in your hand which say that whether you should rely or should not rely, and that has to be specific. I hope I'm clear with that. Okay, can investigator appoint an expert? Can investigator appoint an expert? Should appoint. Okay. If audit report is unmodified, then can relied or not? Audit report is unmodified. There is nothing with respect to the opinion. See, again, whether it's a modified opinion or it's an unmodified opinion, there are other things in the picture that you need to see whether you should place reliance or not. Let's say, for example, there is a modified opinion and the dispute is starting for the investigation from that modification itself. Yes, it has happened. Okay, I cannot disclose the detail, but there was a modification in the audit report, and that modification raised to a, raised a dispute, and that dispute raised to an investigation. So now that modification was the trigger point. So that's why I cannot rely on the modification. I need to perform a detailed investigation to validate whether in actual this particular modification exists or not with the full-fledged evidence. So modified, unmodified, doesn't make any difference. You have to drive and you have to run based on the facts. So the scenario that I'm talking about, I'll just tell you about something on that case was with respect to a bank. Now there was a modification in the audit report, and based on that, bank actually cancelled a particular, you can say, financing facility that was provided to the company. Now the company claimed that it's a modified opinion, okay, where they are like not necessarily that it will impact. So there was some disputes on the to the extent how the modification will impact the interest of the bank. Now bank said we rely upon the modification and hence we will cancel out the financing particular facility that is provided to you. Now it was on the particular company to prove that the modification is not impacting the interest of the bank. So that's why they hired the investigator. They asked the investigator to conduct a detailed investigation on whatever the modification is, how much it impacts, and what are the actual problems that modification is doing in the business. And accordingly, that report was presented to a bank, which was accepted by the bank. Okay, so modification or unmodified opinion can trigger sometimes the starting point, and then at that point in time you should not rely. Clear? Any doubt? Now this comes to my next question is about the claims. Different claims. Let's say there was an investigation between bank and the company. Okay, now bank said no, there is some issue in your books, you did not follow the required things, I'm canceling the financing facilities. Now the company said no, we followed, this modification is there, but it is not impacting your interest, because at the end when a particular modification is presented, something are extrapolated, they are projected based on the sampling. So that is not impacting you, that might be impacting others, but it is not impacting the bank. An investigation was carried out. Now in that particular investigation, let's say the bank is appointing an investigator. Bank is appointing an investigator. Or let's say a person, the company is appointing the investigator. Now, this is investigation arising out of the dispute and conflicting claims. At that point in time, investigator has to make sure that he is above those disputes and conflicting claims. That means whenever he will do the investigation, he has to be neutral, and accordingly he has to present his report. Okay, so he should not allow his report to be influenced. Let's say company has hired me, so my report should not be influenced by the company. Okay, that my target is to present the report in the favor of company. No, that's the role of investigator. He has to be neutral about the disputes, not prejudice to any particular entity. Okay, plus one important point is investigator is not required to make any futuristic claims. That means do not provide any projections or anything, any trend or anything which is, cannot be established, because again, as I said, fact finding, projections are not fact. Simple. Okay, so some important points with respect to the investigations were like these, and any doubt with respect to these points are given on your study material, page number 17.22, like 100% verification or not, then reliance on the audited statements of accounts, then coming to the expert, yes, if required you can. Okay, conflicting claims and disputes, the bank versus the company case. Okay, basis of opinion of the investor, like again, should refrain from speculative opinions, rather than it has to be more fact based. Futuristic claim, because the trends or the projections are not fact. And whether to retain the working papers or not, yes, basically investigator has to retain the files. Okay, has to retain everything. That's why he can, then provide into the investigation report. So now second question comes is how much time he has to retain and everything. That depends upon the type of engagement. Okay, so here the type of engagement, the appointing person will let him know how much detail you are required to keep. But usually it is kept in every detail, because tomorrow if there is a court case, or if there is a dispute in the court, they should be able to justify, okay, this is something finding and this is how it goes. Clear? Any doubt? Any doubts? Okay, if no doubts, then see, this was basically investigations, some important aspect. Now when we talk about investigation, area to area investigation can differ, and based on the nature of investigation you need to understand what sort of investigation is being carried out. Okay, now as I said, there are two different type of investigations. One is your statutory, one is the non-statutory. Okay, one is the statutory investigation. When I say statutory investigation, that means the investigation which is being carried out is carried out under the law. Second type of investigation is a non-statutory. That means it is not carried based on the law, rather it is carried by on the directions of the person. You have a doubt, Manish? Okay. Doubt, no. In which law? Investigation. Sorry, can you? Statutory investigation. So there are multiple laws into the picture. I'm not saying there is one law. Let's say Companies Act, SEBI, okay, IRDA, TRI. They every of this particular law or the regulatory body have the provision to carry out the investigations. They have a power to appoint an investigator, and that inspector will do the investigation. Okay, same like as I said, SEBI has the power. Okay, then Companies Act, some provisions are there that we are going to discuss. Then IRDA has, same TRI has. Then other even let's say for example for the income tax also has the powers. Okay, under Income Tax Act, and their investigations you already know. And sometimes you have a power in the black money law. You have the anti money laundering law, GST also. All different laws have different provisions with respect to the investigations. So there is no restriction on that. Even IBC has sometimes. So that depends upon the law to law. But we will look into Companies Act and some non-statutory parts. Okay, we will look into the Companies Act and the non-statutory part. Now let me talk about the Companies Act. So basically, when I talk about Companies Act, there are 3 or 4 important sections. Section 210, which is the inspector through an there is an investigation by the inspector through an order of central government. Section 212, that the investigation which is done by SFIO. Okay. Section 213, which is the investigation into the affairs of the company, which is in other scenarios. Then Section 216, which is talk about the investigation into the ownership of the company, where they can lift the corporate veil. Okay. Then there are some sections that I will discuss about, which is Section 217, which talks about the powers of the investigator. Okay. Section 219, that is again with respect to the powers of the investigator is there. Okay. So 217 procedures and powers, 219 power to conduct investigation into the affairs. 220 of the Companies Act talks about seizure of the documents by the investigator, freezing the assets. 222 imposing the restrictions. 223 inspector's report. Few there are actions to be taken then on inspector's report. A lot of sections are there in case of basically under Companies Act. And there is an investigation with respect to the foreign companies, 228. So there are multiple things, okay, under the Companies Act with respect to the investigation, and we will discuss few of them. Okay, now when I talk about first and important section, okay, we will understand the type of investigation under the Companies Act, that is 210, which is through an order. Now when I say through an order, basically, let me share the basic provision which is there, and on the basis of that we will discuss. Okay, so what is the investigation into the affairs of the company? That is 210. What it says that basically it says that in case of a receipt of a report from the registrar, or if there is a special resolution passed, or in the public interest, okay, investigation into the affairs of the company may be ordered. By whom? By the central government. If there is a report by the registrar under section 208, okay, and again there are mechanisms provided that first under section 206 registrar will call or conduct inquiries or inspect book of accounts. Then directly he will not issue the report. So what it does this, first of all, under 206 inspection is done by registrar. Then on the basis of that 208 report is issued, and on the basis of that report, if that report is forwarded to the central government, then central government, by using this report and the 206 investigation, they can again call and investigation another one under section 210. Okay, that is one of the criteria. Second, where order is passed by the tribunal, okay, where there is a court order or the tribunal order that the affairs are required to be investigated, then central government can by order do that. Okay, or central government can appoint multiple person to carry out this investigation. So the grounds of the investigation is, first of all, report under 208. Then second is the special resolution passed by the company. Third is public interest. Fourth is order of court or tribunal. If these things are there, then central government can pass an order for the investigate into the affairs of the company. Very important. The objective is and the scope is affairs of the company. This will be the scope and objective. Again, the central government will provide further details when they will carry out the investigation. When they will appoint the person, they will definitely will provide the details. Okay, this is how you need to proceed. Clear? That is one. Second, section 212. We will not go to the entire section, but we will understand something. Investigation into the affairs of the company by SFIO. Now, without prejudice to the section 210, which is the powers of the central government. Okay. So if central government thinks that the investigation is to be done by the SFIO, Serious Fraud Investigation Officer, in that particular case, on receipt of a report of registrar under section 208, on intimation of the special resolution, public interest, request from any department, the central government can allow the investigation. Okay. and then the entire procedure is given. But this is without prejudice to the provision of 210. So if central government thinks we want to appoint, some different person and an investigator, 210. If they want to appoint an, SFIO as the investigator, 212. Then comes the 213. Investigation into the affairs of the company in other cases. Okay, this is not by central government, but other cases, that by tribunal. So tribunal, if someone is making application, let's not less than 100 members, or members holding less than 1/10 of total voting power, or not less than 1/5 of the person in case where there is no share capital. Okay, or on application made by any other person, if the tribunal is satisfied the business of the company is being conducted to defraud the creditors, okay, person concerned with the formation of or the management of the affairs have connection with the guilty of fraud, okay, or basically the company is not giving all the information. So in that scenario, tribunal can order investigation into the affairs of the company. Okay, so these are certain scenarios where investigation can be carried out. So this is one where it is investigation by central government order. Okay. Second, SFIO. And third, basically, is the tribunal. Clear? So in between clause A and B, not word as or. So both clause follow and required. Manish, which one? Which one you're talking about? 210? No, let me go to the 210. See, now, or is specified over here. But that does not mean that these two conditions has to be satisfied. No. That is, these are the scenarios. Okay. The government can, if it is necessary to investigate into the affairs of the company, if this is happening, any of that happening, or is given over here, but it has to be understood in the entire scenario. Like there is a report, or there is a special resolution, or in the public interest, or in this. So it's not necessary. Let's say, for example, there is a report by the registrar, but let's say there is no special resolution. Members are not agreeing to that. That means they will not carry the investigation. No, it is not like that. So the special resolution is separate and the registrar part is separate. Tomorrow, that means I'm giving a power to the member to invalidate the report of the registrar under section 208 by not passing a special resolution. That will be totally incorrect. Okay, so few sections that we saw with respect to investigation into the affairs of the company. Clear? Any doubt? Now, section 216. Now, these are for understanding when I talk about investigation into the ownership of the company. Till now, the scope was affairs, but now the scope will change to the ownership under section 26. Okay, this is scope and objective. You need to establish this ownership. Who owns the company, basically? Okay, to determine the true persons who have been financially interested, who have been controlling, or who have a beneficial interest in the shares of the company. Okay, so under 216, the investigation can be ordered to determine who is the owner of the company. Now, the important points here to understand is that it's not about the investigation under which section it is. It's about the nature and the scope of the investigation that you need to understand. Any which ways, 210, 12, 13, 16 are covered in your self-placed module set A. Okay, so that is covered under the company set over there. But the purpose of having understanding of these sections is the objective and the scope of the investigation. Objective and scope. Same, this also, objective and scope, because here the objective and scope differs. So there is a specific purpose why the investigation is being carried out. Similarly, when I talk about non-statutory, okay, again, on behalf of incoming partner, private companies, okay, advancing loan to a company by bank, fraud, okay, again, these are kind of, defines the scope, and accordingly your investigation will differ. So why we need to understand these investigations? Reason, because here scope and objective differs. Okay. As a result, what to do in investigation and how to do also differs. So how to carry investigation will also differ. And that is what we need to understand. How to carry these investigations in these scenarios. Clear? And out of these, I would say this is something very important. We will discuss in depth. Investigation of frauds. There's a question in exam, question is coming related to this section, so detailed refer or not. You have to refer. You have to refer the sections. Any doubt till now? Any doubt? Yes, no? No doubt? Okay. If no doubts, let's do one thing. Let's take a quick 10-minute break. After the break, we'll continue the session. Okay. Let's take a quick 10-minute break. Sanket ji. Sanket ji. Sanket ji. Break start. Shall we continue? Hello everyone, welcome back. Let's continue the session. So there is one doubt. Who will order investigation under section 216? So for 216, the rights or the powers go to the central government. Central government has the power to order investigation in case of ownership of the company. Plus, there are other things also with respect to, like, just for a knowledge, when the order has been passed, by the central government can appoint one or more person to perform this investigation. So the order will be passed by the central government, but then multiple investigators can be appointed. Okay. Now that was with respect to the investigation types, statutory, non-statutory, and we will now go into the detail of the non-statutory. Any doubts? Any doubts? Okay. If no doubt, let's pick up the first one, investigation on behalf of the incoming partner. Okay, and this is very pretty much common in case of LLPs. Okay, when there is a LLP and that is also into the real estate, okay, this is pretty much common. Now tell me how this investigation is done. Like, let's say you are being appointed as an inspector or investigator who has to conduct the investigation on behalf of the incoming partner. What you will do? How will you carry out the investigation? Quickly. So investigation by the on behalf of the incoming partner. So here our role is to understand the scope. Here our role is to understand the objective, and on the basis of that to discuss how we should go for the investigation. Anyone? How you should go? Quickly. How you should go actually when you want to do the investigation by the incoming partner. Okay, I'm talking about the incoming partner. Okay, and there is a LLP or there is a partnership behind it. Okay, now when I talk about partnership of LLP, basically what you need to understand is, first of all, when there is an investigation on behalf of the incoming partner, okay, why the investigation is being carried out? Reason, because now incoming partner will pay the capital and he will be assigned a percentage of the profit in front of the capital. Okay, he will pay the capital in the company or in the firm basically, or in LLP, and then he will be allocated a share of the profits as a percentage. Okay, now it should not be the case that he's coming into the LLP or the firm, he is introducing the capital, later on he identifies that there are many issues because of which his entire capital has become zero. Okay, so first of all, he needs a confirmation on the position that is being shown to him in the financial records. Second, it is the, where he is investing the amount. It's just like, due diligence. Instead of investing into the shares, I'm investing into the basically partnership firm. So it's just like a due diligence, but here in much more targeted way. It's not a broad, but it is much more targeted way. So here my target will be like, okay, understanding what position which was given to me, plus what is the actual scenario of that firm. Okay, what that firm does, whether the profitability that is shown to me is appropriate, whether the capital contribution is appropriate. All these things I need to assess. And broadly, that will, cover, as I said, history and inception or growth of the firm. Okay, you need to understand the partnership deed. with respect to the respective rights. Okay, you need to think of the profitability of the firm which was shown to you, so that you decided, okay, let me invest into a company. Then you did the examination of the assets and liability position, so that you can determine how much amount is being paid and how much it is attributable to the goodwill, know-how, and how much it is attributable to the tangible assets. Okay, again, with respect to some financial parts like position of the orders, term loan. Okay, then basically how the organization is there, key personnel employed, various legal and contractual obligations of the firm. Okay, all these things you need to understand, okay, in order to determine whether the capital contribution is done is appropriate or not. Okay, then capital employed, rate of return, because that is more important from the partner's perspective. Okay, then competition of goodwill on the admission, on the retirement of the partner, if any is being done, then you need to look into that. Any special clauses, incomplete contracts which can result into the liability or a loss, that is something you are required to look into. So basically these are certain points that you are required to look into when you do an investigation on behalf of the incoming partner. Now let's go for the second one, investigation for the valuation of the shares in private company. How will you perform this investigation? Valuation of shares in private company, and that is to investigation. Quickly. So you have to do investigation into the valuation of the private company, shares of the private company. How will you carry out? See, now when we talk about investigation for the valuation perspective, that means the valuation is done. We have to ascertain whether the valuation which is being performed is appropriate or not. Okay, so there are multiple methods that can be employed to understand whether the valuation was done was appropriate or not. One basically is the net worth based valuation model. Second is the yield based. Yes, there could be multiple different also, but we will cover as of now these two only. Okay, let's say the valuation report which is given to you is net worth based. The valuation report which is given to you is net worth based. Over there, when you are given that report, you have to investigate whether that report is correct or not. So you have to take each asset and liability into account. You need to see whether the values assigned to them are correct or not, whether the book values are assigned or the market value, what was supposed to be assigned, value of goodwill if it is there, okay, which is being carried out, okay, from the super profits, and the estimation of the super profits when you carry out the valuation for the goodwill. So you need to understand all these things, and then you can decide whether the valuation which is done is appropriate or not. So you need to consider each asset. Okay, you need to see whether the value is revaluation market value or the book value, what is the value taken. Then you need to think of the goodwill, you need to think of the super profits in order to justify the goodwill, how the super profits arrive from year to year basis. Okay, and on the basis of that you will calculate whether the net worth basis of the valuation is correct or not. Clear? The second point is yield basis. Now yield basis is something that is on the basis of the right to receive dividends in the future, and that is to be based out of the profits. So how much profits company is going to earn, and how much out of that profits company is going to distribute, plus how much profit the company is going to recapitalize in the business, and that recapitalization, how much that additional recapitalization will generate additional profits. So you need to calculate the yield, and on the basis of that you need to decide what is the value of the per share. That is for the valuation perspective. Pretty straightforward. Clear? Any doubt? Third is on behalf of a bank proposing to advance loan to a company. Now this is very interesting because this happens very frequently. Okay, you will be appointed, go perform the investigation? Because we want to give a loan to a company. Now, before giving the loan, they want to make sure that the company, whatever it is stating for the purpose of loan, is appropriate. Okay, is appropriate. That means if the company is stating that this is how the net worth of the company is, this is how the company will repay, this is how the company has loans already, all these things you need to verify. Okay, you need to verify the profitability so that you can calculate the repaying capacity, whether the company has the repaying capacity. Debt service coverage ratios, you might have heard about these ratios. So you need to evaluate certain ratios of the company in order to understand whether the company is profitable, whether the company is, in a good shape, solvent, liquidity is there. So certain ratios are there that you need to understand. Sales to average inventory, sales to fixed asset, equity to fixed asset, current asset to current liabilities, quick assets. Okay. Then you need to understand the accuracy of the schedule of the repayment furnished by the borrower. Basically, whether he will be able to repay that amount. Okay. Then you need to evaluate the items which are there in the books of accounts. For example, fixed asset. You need to understand whether the fixed assets are appropriate, inventory, okay, whether it's any obsolete or not, trade receivables, including bills receivables. All these areas you need to evaluate. Investments, secured and unsecured loans, provision for tax. Okay, once you evaluate all these areas, then you can come to know whether the disclosure which is made by the particular company to the bank in the balance sheet is appropriate or not. Are you getting the point? So on the basis of that, you can decide whether the appropriateness of the disclosure to the bank is there or not. And on the basis of that, you can perform the investigation on behalf of the bank. Clear? Any doubt? Any doubt? No? Okay, if no doubts, then now we will jump to a very important part. Fraud investigation. Yes, fraud investigation. Now, when I talk about fraud investigation, we already have a particular provision under the audit with respect to the fraud, which is SA 240, which is auditor's responsibility relating to a fraud in a financial statement, audit of a financial statement. Now, when I talk about auditor's responsibility, it is very limited. Okay, so auditor does not start an audit saying that there is a fraud. But when I talk about fraud investigation, over there, the investigation is started by assuming there is a fraud. Now, what is fraud? There are multiple definitions out there. Wrongful doing, wrongful loss, okay, which is not appropriate. A lot of things are there. But when I talk about the categories of the fraud, that's where we need to understand the different categories. Why? Because these categories are very important to understand the types of fraud when I talk about. So basically, we divide the types of fraud into three categories. One is a financial reporting fraud, one is a misappropriation of assets, and third is a corruption. And we will discuss in detail all these things. And we will discuss how this works, what happens, and how to identify. Because the thing is, these different kind of frauds require different kind of basically, I would say reporting part. So first, let's understand what is fraudulent financial reporting, misappropriation of asset, and corruption. When I talk about fraudulent financial reporting, that is a alteration. Your financial statements are altered in a way basically which is kind of to report which is not there. So financial statements are prepared in a way where they do not demonstrate the correct picture. There could be multiple. For example, alterations and falsification of the records and documents, or misrepresentation in the omissions of the events or transactions or information, intentional misapplication of accounting principle, fictitious journal entries, adjusting assumptions, omitting advance or delaying the recognition of events and transactions. Okay, again, abnormal year-end transactions, improper asset valuation, overstatement of revenue or understatement of liabilities, certain areas with respect to the fraudulent financial reporting. Let's understand what are these. When I talk about fraudulent financial reporting, let's say alteration or the falsification of records, that means you create fraud records. You create the records which are not real. And then on the basis of that records, you enter the transactions. Okay. For example, creating fake bank statements. And on the basis of that, we record the transaction. Okay. Second, when I talk about basically, different kind of frauds, then second is misrepresentation in the events and transactions. For example, let's say a related party is there. I'm misrepresenting that this is not a related party transaction. So a related party transaction being reported as a non-related party transaction, misrepresentation. Okay. Then intentional misapplication of accounting principles. Now, what is intentional misapplication? That means you apply the accounting principles in a way, basically, where the transaction are not appearing the way they should be. Classic example, I'll tell you. I apply the revenue recognition, basically, or let's say I apply a particular, let's say, depreciation. Okay, that is based on the useful life. Now I alter the useful life in a way that I am basically, charging depreciation on a higher amount. I'm charging depreciation on higher amount. So you can say that in that particular area, I'm misapplying my accounting principles. One just example I'm telling you. Okay. Then fictitious journal entries which are not appropriate. And there is something with respect to this also in our audit. Can anyone tell me fictitious journal entries which is there in the audit, something relevant in the audit? Anyone? Something there in the audit with respect to the fictitious journal entries. Quickly. Yes? No? So remember when we were talking about something in the planning for the audit, and we were talking about something on the understanding the entity and its risk environment. In SA 315 also, there is something called management override of control. Plus in SA 240, there is something called management override of control. So management is in the position of passing some entries. Yes or no? So over there, these fictitious journal entries like management has a power to pass these entries. As a result, management, what they can do is they can pass certain entries, false account entries, and based on that, basically, things can appear different. I can book provisions, I can book, certain outstandings which are not there. Okay, so these are certain things like, fictitious entries, adjusting assumptions and changing judgments. Again, let's say I have made warranty estimation, and over there I'm changing the assumptions and estimates in a way that, it favors me and I am allowed to book a lower warranty. So adjusting assumptions. omitting, advancing, or delaying recognition of events and transactions. For example, I know that there is something which is going to impact my business, and that has happened in the month of April or May. I'll not record in March. Abnormal year-end transactions. So transactions at the year-end which not appear to be normal. That means, let's say for example, huge sale compared to the entire year. So in last few days of the year, to meet the target, multiple amount of sale transaction has been introduced. But on a similar line, there is no sale which is done for the entire year. Okay. Improper asset valuation, as I said, valuation is an overstatement and understatement of liabilities. That is something called with respect to the fraudulent financial reporting. Then there are other type of fraud, which is misappropriation of asset. Now, again, when I talk about this type of frauds, misappropriation of asset, okay, basically you can classify these frauds or all these every type of fraud into multiple subcategories. For example, fraudulent entries, which has a late entry, no entry, part entry, sales fraud, collection fraud, expense fraud, payroll fraud, data fraud, then banking related fraud. Okay, different other kinds of frauds can be there, and each and every kind of fraud will have a different kind of area. Then there is a asset misappropriation that I'm talking about. Let us see the asset misappropriation. Yeah, this is a chart for the asset misappropriation, which has the theft of cash on hand. Okay, the theft of cash of receipts. Let me explain a few for you guys. Okay, first of all, let's understand what is scheming. Scheming is just the removal of cash from the books or from the entity before it is recorded in the accounting system. Okay, before I record in the accounting system, I'll take away the cash. That's a scheming. Means someone paid cash for the recording, but I never recorded. It's still appearing outstanding. That's a scheming. Now it is very common with respect to common type of fraud in the sales. It is known as a sales scheming. Okay, where employee sells a goods or a service to a customer, collects the customer payment, but never records it. Pretty straightforward. Now here either the controls are not there. Basically, when the sale happens, there is obviously there will be a sale. Okay, and there will be a outstanding. So sometimes they adjust the outstanding, sometimes they only keep the outstanding, they write off. So scheming is done with different areas. Okay, so for example, when I talk about scheming, means the sales is done, collection is not done. Now either what I do is I will not even record the sales. So I will just provide the goods, collect the money, not record the sale, and basically not show anywhere the sale has happened. So there is no point of adjusting. If I am recording the sale, I will also introduce a write-off scheme. That means I'll try to write it off the sales so that no one can do a question on the collection. Third, receivables. There is a fraud in the receivables. Like before the reporting period, I show the payment as received, and then I transfer the payment back and do some type of here and there adjustments. Lapping scheme, very important. What is lapping scheme is? Lapping is payment is done by customer A, applied to customer B. Payment done by customer B, applied to customer C. So you do a lapping so that the more the ones which are old, outstanding, are paid before. The newer sales are shown as an outstanding. Okay, and then when the future collection from any other customer will happen, you will first apply over here. That's a lapping scheme. Or unconcealed. That means I'll not do anything, let it be open. So I'll do the cash, I do the sale, I collect the cash, I'll show outstanding, and it will remain outstanding for years. And I'll show them that the party is not paying the money. So these are the kinds of basically scheming. And along with the scheming, these kind of different other fraud schemes are introduced. Okay. Then when I talk about understated sales, skimming comes also with the understated sales. What is understated sales? That is, I sell for the 100, I record only 10. Happens. Very much happens. And this kind of thing is basically with respect to, you can say, where there is more sale through agents. Or stores. For example, if you are going into a retail store, okay, single brand or multi-brand retail store. Let's say tomorrow they gave you a particular product and they collect the cash from you, but they never record the sale. And they say that no, it got damaged in the inventory. No one is going to check. So if there are not appropriate controls, it will be a problem. Sometimes understatement is also recorded through false discount. So they will make a sale, collect 100, but after making the sale, they will adjust a discount 90%, 95%, and they will only record partial amount. So sale with discount. Okay. That is the scheming part, scheming with the other schemes. Now, again, scheming of receivables and all those things are there. Lapping is there, customer A, customer B. All these things are, done one behind another so that, these things can be avoided or not disclosed. Now, the question comes is, how should you identify the scheming? How can you identify the scheming part? Anyone? How can you identify this scheming part? So if there is some, someone is taking the cash, how will you identify that? What you will do? What things you will check? That's where the scope and the objective of investigation depends upon. Now, again, we are coming back to the scope and objective of the investigation. When you want to do the investigation of the cash receipt because you have a doubt that someone is doing the skimming. Someone is doing the skimming. Now tell me, how will you, perform the investigation? Anyone? How will you perform the investigation? Pretty straightforward. I'll tell you. See, first of all, what I'll do is, if there is a sale, then there is a issue of receipt. Okay, if there is a non-issuance of the receipt and there is sale recording plus the receipt is not issued. Okay, in that scenario, basically, you need to raise a question why the receipts were not issued. There is one doubt. What is the meaning of skimming? We discussed just now, Manish, that skimming is that where it's a scheme, okay, that you take out the cash before it's get recorded in the books of account. Okay. Before I record it in the books of account, I take it out. That means the cash never reaches to the books of account. Not graded receipts. Not generated receipts. Yeah. Basically, you can say that, the receipts are never generated. So now, in that sense, the question comes is, how do we identify the cash receipts? If there was a cash receipt, number one, if cash receipt was there and the receipt, like cash was received and the receipt was issued, there should be a system that the receipts are matched with the cash in hand. If, let's say, for example, if there is a sale and there's a larger discount, you need to investigate. If there is a credit on the customer, or if there is a return of goods, it has to be tied with the inventory value. Okay, if there are being written off, then you need to investigate the write-offs So write-offs, frequent write-offs, bigger write-offs, even smaller write-offs also, you need to investigate. For example, again, we do a check on the pricing. If a particular product of 100 is being sold at 10, if yes, how many times it is happening? On whose authority it is being sold on 10? What is the reason? Discount, coupon, anything? What is the reason? Okay. So a lot of things that we need to understand on the verification part. Plus, you need to understand how the cash should be verified. How the cash is being recorded. Is there any, kind of controls in place? If there are controls in place, we need to understand those controls. Okay. For example, if sales occur, then is there a control that person cannot apply discount more than one particular amount? If there is a sale happens, then is there a control that the price should automatically fetch and person should not be allowed to alter the price? Is there any control on the cash refund or on the sales return, basically? Okay. And how these controls are working. So that is there in the skipping part. Then comes the larceny. Now, what is larceny? It's a basically, again, very important kind of cash fraud. Now, what happens is, it is the intentional basis, I would say that intentional taking, okay, of the employer's cash. Now, in the skimming, cash never came in the books of account. In the larceny, the cash was there in the books, and I am taking the cash without the consent. That means the cash is there in the books, the cash is recorded in the books, it's already appearing in the books, and I'm taking that cash. Theft, kind of. Okay. And that can be done through various ways. Like, for example, if it is a cash register, then cash register in a common stores like scenario. Okay. Reversing the transaction. In a lot of cases, there is a reversing of the transaction. Register manipulations happens. Larceny can also happen for the, let's say, for example, a vendor made a payment, or a customer made a payment. And then I will show there is some issue at the customer payment side. I have to return it back. So the payments then are returned back to the fictitious accounts. Or deposit lapping. That means, let's say, for example, company authorized a person to create some, fixed deposit. Person never created the fixed deposit. So there are various methods of the larceny or the theft, basically. So over there, you need to perform the analytical reviews, segregation of duty controls, different controls. And then on the basis of that, you can understand whether actually this is happening or not. Surprise cash counts, or, basically physical verification of cash and securities through documents. All these things are required to be understood. Second comes is this is cash. Okay. This is the cash we are talking about, because we are talking about asset misappropriation. Now I am talking about fraudulent disbursements. That means I am basically, disbursing the cash which were not supposed to be disbursed. And there are multiple ways for that. First, billing schemes. Billing schemes means simple, fake bill will be raised, and then the payment to the fake bill will be done. Now, behind the fake bill, there could be a shell company, there could be a non-existing vendors, or there could be a personal purchase also. For example, let's say a shell company was created, then billing scheme was introduced. That means the shell company is billing the company, like the services are being provided, but in actual there was no service. Sometimes it happens that in the billing scheme, okay, one real life example I'm telling you, that okay, the billing scheme was there. That means the fake bills were presented to the company. Now there was a shell company. Now what this shell company was doing, let's say there was a genuine vendor, ABC, and there was a shell company, ABCD. Okay. Now what was happening is ABC was providing the bills, ABCD was also providing the bills. Now the bills of ABC plus the bills of ABCD, they both were recorded as the services which are being obtained from the ABC. And in turn, payments were going to the two different accounts for the ABC and ABCD. And it was shown that this company is one of the sister company or the group company of ABC only. A shell company created by employee to show that it is a part of a group company who's providing service to the company. And billings were happening because the budget is being approved at the group level. So shell company, then non-existing vendors. That means vendor, they never exist, they are billing and the payments are being made. Personal purchases. I purchased for my personal purpose and I billed in the name of the company. Pretty common. Then payroll schemes. Payroll schemes are kind of, where basically what happens is fictitious payrolls are run, salaries are provided. Ghost employees. That means employees who are on paper, actually they are not there. In existence, they are not there. Falsified wages. You are supposed to get, let's say, 50,000 a month, but somehow you met the HR did a fraud. He said, I'll increase your salary from 50 to 80. You pay me 20,000 out of the additional 30,000 you are receiving and keep 10 with you. Falsified wages. Commission schemes, similar. Okay, that I will increase your salary, you pay me commission for that. So payroll schemes are there. Then fraudulent disbursement also has an expense reimbursement. Pretty common in the corporates, I would say. Fake expense claim. Okay. That means expense which are not there, they are claimed. Mischaracterized. They will show that, personal food expense shown as a client food expense. Or, personal stay somewhere will be shown as a client trip and will be claimed. Overstated expense. Okay, that is the expense incurred of rupees 100 will be, reimbursed of rupees 200. Fictitious expense. That is a real example I'll tell you. What happened in this particular example? Okay, so there was a project team. They were allowed to go on the projects, and over there the stay and the food was borne by the company. A particular employee claimed the reimbursement of expense. Okay, in that, what triggered the entire investigation was, I'll tell you, this is a real example. Pizza, which was of rupees, usually in the market you can get up to 1,000. He made it to rupees 2,500 of a particular ABC restaurant. Okay. Plus some food item, let's say rice or whatever it is, XYZ food item was shown as rupees, let's say 3,000 per dish. Now, at the time of, when the reimbursement was submitted, the backend team went to the Zomato. They checked the menu of that particular restaurant, like, just to see, like, so, costly pizza might be a 5-star restaurant. Okay, might be a beautiful restaurant and they have never heard of this particular restaurant's name. So could be a very good restaurant. So like they thought, okay, let's do the checks. Next time we will also go to this restaurant. When they checked, the real price of the pizza came out to be only rupees 300 or let's say rupees 500. The dish which was shown as a 3,000 was only rupees 650. The menu price which is there on the Zomato, all these apps, and versus the amount which was claimed. And that was out of the curiosity. They decided, let's do a research. It appears to be a good restaurant. That triggered the entire fraud investigation. And it came out the employee was able to siphon the funds in name of the reimbursement every month more than his salary. So let's say his salary was 50,000. He was easily able to siphon the funds more than 50,000 on the name of reimbursement. And that was running off last 3 to 4 years. This is how it happens. Multiple reimbursements. This was also performed in this particular scenario. A bill I claimed now, again I will reclaim that bill after 2 months. So single bill being claimed multiple times. So these are the kind of fraudulent reimbursement happens. Then there are different kind of frauds in the market, and there are combination of them. It's very easy, like you can edit the PDF. So nowadays it's AI, and back those days, let's say, if some, like if I talk about 2 to 3 years ago, there are portal who can provide you fake bills. There are PDFs tools which can allow you to edit the PDF files. So it was pretty easy to edit the PDFs and to create the fake bills. Any doubt? Any doubt? So basically, multiple activities can be carried out, multiple fraudulent transactions can be entered into. As I said, commission incomes, cash receipts. So you need to understand what is happening, and then on the basis of that, your investigation will fall into the place. Okay. For example, inventory frauds. Inventory frauds basically happens that employees take out the inventory from the companies, okay, from the warehouse, without basically recording in the books of accounts. There's a theft, or they will kind of show as a damaged inventory, or they will show that inventory lost or in transit. So there are multiple ways. So you need to understand how you can perform the verification of that particular portion. The goal is to perform the verification, because if I say this kind of fraud, you should be able to perform that verification. That will become your scope and objective. And then your rest of the things will work upon. So the target is to understand the various scopes of the fraud. Okay, let's say inventory fraud. Now, what is the verification that you will do with respect to the inventory fraud? Now, as I said, it is something, for example, employee may simply remove the goods from the premises, but they cannot remove from the books. So physical count will show that. If the goods are being removed from the premises, then is there any, gate receipts being prepared? Or is there any, other documents being prepared? So what are the inventory controls in place? Movement of inventory, goods receipt or goods dispatch note, or gate receipt, gate outward notes. Okay, are there any these records available, or is there any absence of these records? So absence can also trigger a kind of investigation. Can also say that okay, there is a chance of fraud. Okay, so whether the good inward or outward register being maintained or not. Okay, so all these things you need to verify, and you need to understand whether there is any actually movement of the inventory. For example, physical count will be conducted. Then after the physical count, is there any shortage? Is the shortage being investigated? Or what is the purpose? What is the reason of the shortage? Who is responsible for the shortage? Whether it's a normal loss, this shortage is normal loss of the production, or it's an abnormal loss. Okay, is it a wastage? If wastage, then whether you sold that wastage as a scrap. I'll tell you one of the critical fraud case in this scenario. What happened was, so this is with respect to the wastage part. Okay, so goods was there, like let's say it is copper. So it's a manufacturing company, and the copper metal, pure copper metal, was one of the raw materials. Okay, now copper is very costly raw material. So what they did is, that employee who was the in charge of the warehouse, he recorded that this copper basically got rusted due to weather conditions. and that is not fit. And what he did is he called the engineer from the production team. He paid some amount to the engineer, and engineer provided a certificate saying not fit for production. And then they both, engineer plus warehouse guy, sold this as scrap. Now this scrap was sold to a known vendor. Usually, when a scrap is sold, you sell at a percentage. Let's say the original value is rupees 100. So you will sell at 10 or 20. Okay. This scrap was sold at only just 3% of original value, not even 10. Usually the copper recyclable metals, or these metals fetch much more. They at least fetch 20 to 30% of their original purchase cost if they are waste. It was only 3%. And this vendor was a related party. And then this vendor sold this particular material as a good product. Good product, again back to company. So the same vendor who was purchasing scrap was also supplying raw material. He bought the material as a scrap from the company. Same material was sold back to the company as a good raw material. This is how entire inventory fraud was being carried out. And this basically came to identification was when some other engineer reached to a particular location to verify the that certificate of the scrap. So like usually there was one engineer who was supposed to go, but company sent some other engineer, okay, because he was not there. And that engineer, when he saw this, he saw that this is not a waste. Why should I record this as a waste? And then the warehouse guy said, oh, sorry, my mistake and everything. And then that engineer, felt something is not appropriate. He complained to the management, and management started an investigation. That investigation went on without being, intimating to the warehouse particular manager. Warehouse manager was never aware about this investigation. This investigation entirely happened at the back end. People came onto the warehouse just as a normal, inventory count. They never disclosed why they are there. It was appearing like just a routine warehouse check and everything. Once the investigation got closed, everything was presented, factual findings were presented, then the actions were taken. Actual scenario I'm telling about. So this is how the fraud investigation happens. So first of all, you need to understand the objective of the investigation, why the investigation is happening. On the basis of that, you need to take the step. Clear? Any doubt? Any doubt? Okay. Now, see, every time you cannot act on the basically, someone saying, okay, there is a fraud. You act on that. No, it doesn't work like that way. Basically, what you need to do is there are some red flags also, some indicators also that you need to understand that, okay, these indicators are there. That means this direction is correct and there could be a chances of fraud in this particular direction. Okay, so those indicators are something that you need to understand. That's very, very important. Can anyone tell me about stock? There is one question. Stock is dispatch but not sales. What benefit? Can you repeat your question again, Manish? Like onto which point you are asking? In fifth point. Stock actually dispatched but not entered in the sales or data account. Okay. Yes, reason because if the stock is dispatched but never recorded in the sales or debtors account, that means you will get the payment, but you will never record the sales. So this is kind of an extended version of you are not recording sales, you are collecting the amount, and somehow if the sale is being happening, you have to manage the inventory also. So that's in the connection with that. Stock actually being going, sale is never recorded, and at the end you collect the amount. And that amount is collected out of the books. Stock statement differs. Yes, stock statement differs. At that point in time, they show wastage, they show damaged, they show absolute, all those things. When the physical count happen, that's why the differences come. Okay, this is the wastage, this is damage, this is obsolete. And at a lot of times, when the inventory is of such nature that the counting is not possible, like liquid, chemicals, petroleum, best excuse they will give is evaporation, or best excuse they will give is the measurement changes based on the calculation methodology. So it's not easy to calculate a liquid. Basically, you may have a packet of, let's say for example, 1 ton or 2 ton or entire storage of that, or storage tank is there, but how will you calculate? Yes, there are some standard set, but again, those are based on assumptions. Simple example I'll give you with the petroleum. So you cannot just go and measure the petroleum in the tank. You need to see what is the density, what is the pressure in the particular tank. You need to apply some formula, some basic assumptions. Okay, this is the pressure, this is the density, this is how much is the volume of the tank. On the basis of that, you measure the actually how much petrol or the oil or any chemical it is. Because certain chemicals, let's say for example, some some specific chemicals, let's say hydrogen, they are in the nature of gas, but when they are stored in a liquefied format, or in a liquefied, let's say oxygen, okay, when they are stored in a liquid form, liquid oxygen, their volume, their density and everything changes. You cannot easily measure. Okay, so at that point in time, it is very easy to deviate, or to create a scenario where your meter readings or everything will come different. So that is a kind of fraud that is done in these specialized industries. So over there you need a specialist expert who are well trained in calculating these kind of inventories. For example, let's say I'll give you one again good example of the copper. Okay, so where I was doing this kind of investigation, this copper metal, it's very easy to manipulate. Why? Because these copper metals or copper tubes that were there, they were hollow. What they used to do is, okay, in books you have a 1 ton of copper. What they will do is they will remove the half ton, and in the half ton which is hollow from inside, they will fill up something, and it will appear that it's a copper, filled copper. Okay, so you will never come to know that inside there is something which is increasing the weight of the copper. For example, usually those hollow tubes of the copper, they were supposed to be filled by the foam. What they do is, in the start there is a foam, in the end there is a foam, in the entire tube in the between there is something heavy metals, which increases the weight of that particular tube a lot. You'll never come to know that these kind of activities are done just to increase the weight and to show and to match the quantity of the copper. A lot of things are done, a lot of techniques are done to do the fraud. So it becomes very important to understand what is the objective. Clear? Any doubt? Now the question comes is, you cannot identify each and type of every type of fraud. Like, you tomorrow there could be a third type of fraud which is there in the market. Someone can bring a combination of two frauds. Can you remember each and every type of fraud? Can you remember each and every type of fraud? Yes or no? No, you cannot. Okay. I'll come on to that, Manish. Don't worry. I will come on to that. So you cannot remember each and every type of fraud. As a result, it becomes important for us to understand how to identify the fraud. And that is done through certain indicators. Okay. That is done through certain indicators. And based on that, you identify the fraud. Now, let's understand this with the help of a question. So the question is, during the course of audit of Limca Limited, CA Rajan observed frequent changes in accounting estimate of receivables, delay in providing information requested by the management, including altered documents. He also noticed discrepancies between the company's records and external party confirmations. These factors made him suspect the possibility of the fraud in the entity. Now, identify the common indications that may alert an auditor to the existence of the fraud considering the given situation. So, given this situation, you need to identify the common indicators of the fraud, okay, which can alert an auditor to the existence of the fraud. So every time you cannot identify the type of fraud, you cannot remember each and every type of fraud. But over there, what we can understand is the indicators to the fraud. Are we alert to the indicators of the fraud? If yes, then are we able to identify those indicators? That is very important. And that's where, we need to understand how to identify the fraud indicators. Okay. And this is with respect to the given question. So tell me, what do you think could be the fraud indicators in this scenario? Based on the given question, what are the fraud indicators? Anyone? Management override of control. Okay. What else? What are the other indicators that you can see in the given scenario? Pretty common, huh? Answer is already there in your question. What are the other scenarios that you can see, or other indicators that you can see which are the indicators of fraud? Quickly. Which are the indicators that you can see over here? Manipulation of books, yes. Incentives, yes. What else? Anyone? What are other indicators that you can see in this scenario? Because here the point is we need to understand how to identify the fraud. Then only you can identify the system, and then only you can identify what type of fraud is happening. Okay. So the entire connection is like that way. First you identify the indicators, then you identify the nature, and then you identify what is happening actually. Okay. Now in this particular scenario, if you see, the documents which are being provided are not appropriate. Yes or no? The documents which are being provided are not appropriate. So there is a change in accounting estimates. Documents are being altered every time. There is a information which is being sought, and there is a delay in the information which is being provided by the management. All these are fraud indicators only, by the way. So basically, if I talk about the indicators, they are discrepancies in the accounting records. That means if there is something provided to you and the other accounting record which is provided to you, if they do not match, there's a discrepancy in both of them. Okay, then that is a chance that there could be a fraud. That's an possible indicator I'm talking about. Okay. Then non-recording, partial recording of the transaction, incorrect recording of the transaction. Now, management may say that non-recording, partial recording, incorrect recording is not intentional. But what if this becomes intentional? If this is an intentional, that will become a fraud. Discrepancies between the entity's records and the confirmation receipts. Missing documents. If they are done for the purpose, that is a fraud. If management is providing responses which are not acceptable at all. For example, you ask management why there is the difference between the inventory that you provided to me and, let's say you identified physical discrepancies in the inventory count. Okay, so there was a discrepancy in the physical inventory count. You ask management why the inventory is not there. They will say inventory actually is in some other warehouse, or the inventory is being issued to repairs, or the inventory was lost. So they give you a reason which is not acceptable. Okay. Frequent changes in accounting policies, or the accounting policies which are not on the industry norms. So accounting policies being followed which are not being followed either in the industry. It is altogether different accounting policies, or there is a frequent change in the accounting policies. This year like this year, for example, if I just show you, I'll talk about the estimates. Okay. Let's say, for example, warranty. Best example. Warranty. So let's say FY 24-25 estimate was 5%. Now next year they did not want to show more of profit. So in 25-26, what they did is warranty from 5% to 17%. 17% from 5%. Why? We want to be prudent about the claims that we receive against the sale. There is no change in the production. There is no change in the quality. There is no change in the products being sold. Why sudden increase so much? So like this way, if let's say, for example, 23-24, it was, let's say, 3% or XYZ%. If there is a frequent change, these are the indicators of fraud. You need to be alert on these indicators, and on the basis of that, you can basically identify any fraud. Like more new competitor coming on this year, it could be like the reasons that are not valid, or you will not find reasonable. Like if I'm not getting the reasonable, like one of the, I remember with the warranty reasons I got is the customer are more intelligent and aware nowadays. That's why we are making more warranty provisions. You need to be like the reasons that you receive, you have to evaluate those reasons. Like customer are now being more aware about their rights, and that's why we are doing more warranty provisions. Yeah, that's some reasons we have received when we went for the investigations and understanding some of the workings. The second question comes is, explain the 4 elements of fraud, often referred as the fraud diamond. See, fraud diamond came into the picture when there was first fraud triangle, and fraud triangle kind of felt there is something missing. So they introduced fraud diamond. Okay. So what you need to do is you need to provide 4 elements of the fraud diamond basically. Okay. 4 elements for the fraud diamond. These are the elements that, if present, they denote that there is high chance of fraud being present. Okay. I know this is not a proper diamond, but yes. 4 elements of fraud diamond. Which are those? Quickly. Come on. Incentive, yes. Rationalization, yes. What else? Opportunity. So now this is where I'll take a pause, okay, and I'll discuss what happened and why we actually came with a fraud diamond. Okay, so first was a fraud triangle. What was fraud triangle basically? Fraud triangle was based on 3 things, 3 important concepts, and these were basically your incentive, opportunity, and rationalization. Okay, incentive, opportunity, and rationalization. Now, that was the first triangle or fraud triangle that was there that considered these 3 elements: incentive, opportunity, and rationalization. Now, what is incentive? Incentive was the benefit that one will get by doing the fraud. Opportunity is a chance that the weakness in the control, okay, that they can exploit to do the fraud. So when I talk about incentive, it's kind of a profit that they will get. Okay, the benefit that they will get. Sometimes incentive is also referred as a pressure. Pressure to do the fraud. Okay. Now, second comes the opportunity. You can directly say that it's kind of a weakness in the system, which allows the people to do the fraud. Okay, weakness in the system or controls that they exploit and they do the fraud. Third is the rationalization. That means how they agree to it. They agree to do the fraud. Agree means, see, when I talk about rationalization, that is, they think that is the correct way, that is the appropriate way. Doing fraud is normal, rationalizing it. They agree to it. Yes, we have to do the fraud. That was a 3-part: incentive, opportunity, and rationalization. Now, this was not sufficient. A lot of times it was discussed, it is not sufficient. Why? Because let's say I'm a person. I know I have a pressure. I know there is a weakness. My mind is saying I have to do a fraud. But there is one more thing that is stopping me. And that where, the fraud diamond came into the picture, which was capability. Capability talks about, you can say, intelligence of using the weakness to gain, or using the weakness or opportunity to gain the incentive. Okay, that means I should be intelligent enough that I can use the opportunity to gain the incentive. And I can do the entire scheming of fraud without being captured. That is the capability. Earlier, before capability, everything being there does not guarantee that I will do a fraud. No, it was not. But now, after the capacity, after the capability, there is that the traits or abilities of the person to pull it off, that I can now utilize the opportunity to get the incentive. That's the capability, and that completed the entire fraud diamond structure. That was a more good, I would say, model to determine fraud. Now, where these models are used, basically these models are used, to identify the frauds. If all the four things are present, so there are high chances that there will be fraud. So whenever you evaluate a system, you evaluate whether there is any pressure or incentive on any person. Second, you evaluate, is there any weakness in the system? Third, you evaluate whether the person who are into that role, do they have the capability? And rationalization is something you can only come to know when you speak to that person. Okay, so by speaking to the person, by investigating the system, by understanding whether there was incentive or pressure, if you are able to establish all the four elements, then there are high chances that there will be a fraud. So that is how you need to evaluate this particular model to identify the fraud risk factors or the red flags. Okay, and then on the basis of that you can carry out your investigation. Now investigation sometimes will be to establish whether there is a fraud or not. So you cannot directly establish whether there was a fraud or not. First evaluate on these four elements. Is there an incentive? Yes. Is there an opportunity? Yes. Is there a rationalization that the person will do? Yes. Whether the person has a capability, then there are high chances of fraud. Now go into that direction and see that how that person can utilize his skills to exploit the opportunity or the weakness in the system and gain the incentive. How he can gain the incentive. You need to run into that direction to understand the fraud schemes that he can manufacture or he can actually devise. Clear? Any doubt with this? Any doubt with this? So that was the fraud investigation and response to the fraud that we discussed. Okay, and that's where we close our topic of investigation. Any doubts? Any doubts? No? Okay, so we covered the investigation into detail today. Various type of investigations we discussed. Okay, various type of. Now, can quickly anyone tell me the steps of investigation? A quick revision. What were the steps of investigation? Quickly, steps of investigation. How do you perform the investigation? Come on, come on. 5 steps. Quickly, a quick revision. 5 steps of the investigation. Very good. Objective, program, then evidence, yes, analysis, and reporting. Very good. OPEAR, OPEAR. That objective, program, evidence, analysis, and reporting. Okay, now next thing. There are how many type of investigations are there? If I have to categorize in categories, 2. Very good. Statutory and non-statutory. Okay. Now, with respect to the investigation, okay, and the statutory, we saw multiple sections. Non-statutory, we saw multiple scenarios, and we also saw multiple type of non-statutory with respect to their objectives also. Okay, and then we came to the fraud. How many of type of frauds we identified into categories? 3 big categories were there. Can anyone name those 3 big categories? Three big categories of the fraud that we saw. Financial statement fraud, misappropriation of assets, and corruption and bribery. Financial statement, journal entries and everything we saw. Incorrect accounting policies, delaying the transaction or postponing or preponing the transaction. Misappropriation of asset, cash, sale, inventory, fixed asset. Bribery like corruption, bribery, all those things. So 3 types of fraud, big categories. Then we went ahead and we discussed about the fraud diamond and the fraud risk indicators. Fraud diamonds, 4 elements of the fraud diamond: opportunity, rationalization, incentive, and capabilities. Okay, clear? Any doubt on any of the things that we discussed today? Any doubt? No? Okay. If no doubts, what I suggest is I would like you guys to read through the chapter if you are not read. And in the next session, we will discuss on the forensic accounting and we will start chapter number 18. So please read the forensic accounting part at least. Okay. And bring your doubts. Okay. If no doubts, then thank you guys. Thank you for participating in today's session. I'll see you in the next. Thank you. Thank you. Good night. Sanket ji? Yeah. Thank you.
Recording stopped.